Hello investors and traders, welcome back to the Trend Trader channel. So in today's video, I'm gonna walk you through to three companies. These are the companies that I'll be adding into my portfolio. So in today's video, I will cover what I like about those companies. We'll go through the financial statements of those companies to see if there's an interesting information that we can pick up from those companies. And then once we are done with the financial statement of each company, then we will look at the chart in order to identify trading levels where we would like to take those positions, and then also where we will be setting the stop loss. And the companies that we'll be covering today, they are paying dividends, so we're just buying at the back. We know that based on their report, these businesses are profitable, they are capable of paying dividends. But also when we look at the chart, you can see that these businesses have the potential to pay us dividends. Remember, dividends in South Africa, they only come twice per year from an individual company. There is an interim result, which is the first 6 months of the business year of that particular company, and then the final year result, which is like the 12 months, the second 6 months or the second semester, right? So now what we'll be looking for some of these companies, it's interim result, but the other two companies haven't released their interim result. We'll be looking at their previous final year result. The reason for that is because at this moment the chart looks great for those companies, so they're giving us buying opportunities. So we're not gonna wait until those companies release their result. But in this video, I just want to walk you through what I normally look for whenever I'm deciding if I'm buying a company. Okay, so let's first look at those companies that I want to talk about today. So the first company that I want to talk about is Clicks. I'm sure a lot of you already know what is Clicks, the business that Clicks is involved in. But if we look at Clicks website, they say that they're a retail health group. They've been listed in the JSE since 1996, and then they've got different brands under Clicks. We know that they have the household name, which is Clicks. Then they also have products like GNC, the Body Shop, and many other things that they sell them. So the result that we are going to be looking at for Clicks, the interim result that they released yesterday. So we're just going to be going into those results, looking at the financial statements, trying to make sense if there's an investment case for Clicks as a group. So if you look, like I said, we're looking at the interim result for 2022, and then when you click there under view result announcement, then you should be able to get this PDF, which is the summary of the interim result. There are lots of things that they spoke about, but I'm not interested in those things. I'm only interested in the financial statements, not the chairperson's statement or the CFO statement or even the auditor's statement. I'm just interested in the financial statements. So when we're looking at the income statement for Clicks, whatever they call it, in this case they call it a comprehensive or a statement of comprehensive income. When you look at this, the first thing that I'm interested in is the revenue of that business. So we want to compare. Remember, we are looking at the result for the 6 months that ended in February 2022. So we like to compare those results with the result from the previous 6 months. So if you look at the previous 6 months, we saw that they had about 19 billion rand as a revenue, and then for 2022 they have a 20.9 billion rand as revenue. What we're seeing here, the revenue hasn't increased by much, but the increase is just marginal. Then when you look at the turnover, it's about previously it was 17.946 billion, and now recently it's 19.55 billion. Okay, so now as we can see, now based on this revenue, we can see the gross profit, which is about 4.13 billion. That is before tax. Then we look at the operating profit, it's about 1.75 billion. Then we look at the profit after tax, which is 1.2 billion. It's important that you consider the profit after tax, because we cannot count the money for a business if they haven't paid tax. The business has to do the day-to-day operations and then pay tax. Then after they've paid tax, then we can start looking at the profit to see if there's a profit after they've paid tax. So for what we see for clicks, we can see that they have a profit of 1.2 billion. If you compare that with the previous profit of that previous interim result, it was 891 million. So it's a significant, or it's about 400 million improvement there. So that is nice result there. We can see it's about a 32% increase. Yeah, it's about 35% increase there. Then once we know that the business is profitable, we already know that there are so many number of shares that are available in the market that people can buy. Then we want to see the earnings per share. What we want to see from earnings per share, we want to see the earnings per share increasing, because it means that every R1 that we invested in Clicks Group, it is making us money. So from what we see from this earnings per share, we see that the previous earnings per share for the previous interim result, it was R2.58, and then now there is a 37% increase to R4.92 per share. So as a shareholder, I'm happy with this result, because it shows me that the Clicks management is able to take my money, put it in the market, and then be able to generate more money for me as an investor. So I'm happy with this earnings per share. This is just the first page that I will normally look at, and then I also like to look at the balance sheet. In this case, they call it the statement of financial position, but it's a balance sheet. It gives us an idea of the asset and the liabilities of Clicks. The things that I'm interested in, well, the non-current asset like PPE, property, plant and equipment, it is important for other investors. It's fine. For me, I'm more interested in current asset, because I use current asset and current liabilities in order to determine if that business has a positive net working capital. Net working capital simply means that the business is going to be able to cover its liabilities within the next 12 months. So that is why I'm interested in current asset. When we look at the current assets, it's about 10.71 billion, and then we compare that with current liabilities. The current liabilities are 9.9 billion. So there we find a positive figure. So now I'm confident that Clicks is a profitable business, and it has enough money to cover its short-term obligation. Then you can continue to go through the balance sheet to see what else is reported there, but that's just that I wanted to share with you on this Clicks result. Then when we look at just the summary now, the summary of this result, we can see that they reported that the group turnover increased by 9%, and then the retail turnover, it increased by 13.6%. Remember, the retail is the one where you can just easily walk into the Clicks shop, but it's a big business. They also have some logistics, some properties that they own, and other businesses like where they manufacture some of the product. Then we look at the diluted headlines earnings per share. Remember, headlines earnings per share, it means that there are some once-off events in that particular business. So to me, it doesn't mean much. I'm more interested in the earnings per share, because those ones are the ones that are sort of continuous. But if you look at the interim dividend, we see that the dividend has increased by 26% to R1.80 per share. So now we are in April. This dividend is only gonna come into our bank account somewhere around June. It's still going to take some time, but the dividend that is coming is R1.80 per share. That is gross dividend. They haven't deducted the 20% dividend withholding tax. So now what you can see, the return on equity, they say that it has increased by 47.2%, and then 1.3 billion was returned to shareholders in the form of dividends and buybacks. So we know that the dividend is the cash that ends up in our pocket, but the buybacks, it means that as the company is buying more of the shares from the market, the value of the shares that are still outstanding, it increases. So whenever you look at the company result, maybe you see that the company didn't pay dividend. If they didn't pay dividend and they didn't do share buybacks, then effectively the value of your shares is not that increasing. Forget about the share price, but the value of your shares, it means that it is not increasing. But in this case, since there are dividends and also they are doing share buybacks, then it means that as long as they reduce the number of shares that are in the market, then the value of the shares that are outstanding, or the value of the shares that are in possession of investors, whether it's retail investors or institutional investors, it is increasing. So for that reason, we are happy with the clicks result when you look at it. Then now when we go to the chart, for those people, I know that there are people that are on TikTok, you don't see the screen. We are going to upload this video on YouTube. Make sure that you go to YouTube, you subscribe to our channel. The name of the channel is Trend Trader. You already know that you can find the channel, the link to our channel on our bio there on TikTok, or when you click that small button is going to take you to YouTube. Then you can subscribe. That is going to ensure that once we've uploaded this video, you can see it, because now we are live on TikTok and we are currently recording. So I know that you guys are not seeing the screen, so don't think that I'm a crazy person, right? So let's continue with the recording. So now when you look at the chart of clicks, we can see that it is forming something that looks like a bullish wedge. I'm not perfect with the chart patterns, but what you can see, we see this moving average, it's on an uptrend, and clicks keeps on finding support on multiple times whenever it reaches this level. And then we saw this week, before the announcement of the result, we saw that there was a large spike. The share price went above 320 rand per share. But also if you look at the volume, there is a large spike on volume there. It shows that there are buyers that are pushing the share price high. So now when you buy clicks at this level, we will have a bit of confidence, because we can see that there are actually buyers that are pushing the share price high. We're not expecting a fake out. A fake out can happen, but we are not expecting it. And now how do we protect ourselves from a shake out or a fake out? It means that you need to have a stop loss. So depending on your risk appetite, you can set your stop loss just below this level, which is about 295 rand per share. That is your stop loss. The current share price is 315 rand per share. So it's either you're going to buy the current share price, or you're going to buy clicks at a higher share price, maybe at 322, so that you can have that confidence that it is breaking above this level. So depending on the platform that you are using, you can just set a buy stop order somewhere around 322, and then have a stop loss somewhere around 295. But if you have a higher risk appetite, then you can set your stop loss somewhere around 280, which is below this levels where clicks kept on finding support there. Remember, whenever you are using position sizing, you can either buy more shares, but if you buy more shares, it means that you need to have a tight stop loss. But if you have a wider stop loss, it simply means that you have to buy a few shares. So make sure that you manage risk accordingly there. So that is the plan for buying clicks. I will have a buy stop order somewhere around 322, and then I will have a stop loss somewhere around 255, because there is no guarantee in the market. The share price can just break lower, and then you end up you are being stopped. Okay, so now the second company that I want us to look at, the last time they reported result was 30 September 2021. The name of the company is Omnia. Omnia is a chemical company. They produce fertilizer, among other things. Since the beginning of the war in Ukraine, we saw that there was a fertilizer shortage. In the US, we were able to get some good trades from fertilizer companies because of the shortage. The share price of those companies, it shot up, but Omnia was still trying to pick up. We did buy a bit of Omnia somewhere around 7 rand per share, but now Omnia is trading above 8 rand per share. It is also giving us a buy opportunity, because we were waiting for Omnia to break above that 8 rand per share. So in terms of financial statements, there isn't much that we can say from Omnia, but when we look back just from the result that we released in September, we can see that the revenue of the business, it increased to 9.9 billion. It was an increase from 7.6 billion. And then also the profit after tax, it increased to 467 million. We know that we had the shares of Omnia, we received a dividend there. So we still expect the company to continue to be profitable, especially with the shortage of fertilizer. If some of the buyers, they really need fertilizer, then Omnia can have that advantage of demanding that the buyers, they pay more price. But now, as consumers, at the end of the day, we are also going to suffer, because if the food producers, they pay more for the inputs, then they are just going to take those costs and pass them to us consumers, which explains why food is also becoming more expensive in the shop. So as an investor, I'm excited that the share price is going up. The demand is going to cause the demand of fertilizer to go up, which is going to increase the revenue of this business. The share price is already going up, but also at the same time, I need to be mindful that as fertilizer gets more expensive, it means that the food that I'm buying at the supermarket is also getting more and more expensive, right? Like I said, these are all result. There's not so much that I can say there. One interesting chart is the one where they're showing that they want to move from the net debt coming to net cash. You can see there in 2019 they were down about 3.2 billion, 2020 about 4.6 billion, then 2021 it dropped their debt, it dropped back to 1.94 billion, and then for 2022 they are projecting a net positive cash of 719 million. So we'll see when that interim result comes, what they will have achieved there, right? So now let's go back to the chart and find Omnia to see the what is happening with this fertilizer company. Like I said, we've had several positions outside Omnia. In the US, we're happy like CF Industries. So the first time we bought Omnia somewhere around 30 rand per share. We've been holding this position since then. As you can see, it's been trading nicely on an uptrend, and then we noted that there was a time where it started to move sideways a bit, but after they paid that dividend, that is when it started to move sideways. Then when we saw that it broke out above this level, there was a decent amount of volume somewhere around March. That is when we started to buy more Omnia shares. We made several videos covering why we are buying this company, but we're mindful that here there might be a bit of a resistance level somewhere around 8 rand per share. As you can see today, the share price is 83 rand 27 cent. Even though the volume is a bit slow, but the share price is currently above this resistance level. So we are buying with caution here. We're not going to buy a lot of shares, we're just going to buy a few shares, and then we can either have a stop loss somewhere around I think this is about 73-75 rand per share, in anticipating that the share price is going to continue to trade higher. And then also, if you want to limit your risk, you can try to put your stop loss somewhere around 65 rand per share. Then that will give you a wider stop loss. But then again, remember, the wider the stop, the few shares that you should buy in order to ensure that you don't lose a lot of money in this position, right? So now, yeah, at this moment we are happy. It's nice. The moving average is pointing up, so it's on a nice solid uptrend. Even though it's now in the volatile area, ideally you would have wanted to buy it when the volatility was still low, but the market is not always perfect. Okay, then the last company that I want us to touch is Motus Holding. This company, it owns or it is involved in the car business. They do not produce the cars, they import cars and then they sell it to us consumers. The brands that they import mostly, it's Hyundai, Kia, Renault and Mitsubishi. You see a lot of people these days, they are buying Hyundais and Kia because they are affordable brands, or maybe they're offering them a value for money. Then they're also involved in some retail and rental of other cars, including big names, German cars like BMW, Audi, Alfa Romeo. Okay, Alfa is not a German car, it's I think it's an Italian car, but they have Honda, they have Jeep. So you can see from the list of the cars that they have most brands, including Mini Cooper, but Mini Cooper is part of BMW as well. And then they're involved in the business of renting out cars. You can see we have a Europe car, and then we also have a Tempest car hire. Those are the businesses that operate in South Africa, but they also operate in the UK, Australia. So it's a company that is also diverse geographically. So when you buy from that, if something happens in South Africa, we know that the business will be operating elsewhere. Then you can see they have also mobility solutions, different products that they have, including financing of these cars. You can see that they have Hyundai Finance, Kia Finance, and then they're also running an insurance company. So in terms of cash, it's not much of a problem. We know that the cash is going to keep on coming. As long as people are buying cars, they will need finance, they need to insure those cars. So the cash is just going to keep on rolling. But they're also involved in an aftermarket part business. As you can see, well, depending on what kind of skorokoro you are buying, you could be buying aftermarket parts. We see Motus. Most of us are familiar with Motus because Motus is almost everywhere, but they're also there on the clutch and brake system company. They call them the clutch and brake expert. Yeah, so, and also AutoCare is another new car service or car workshop that is offering a value for money for consumers. If you can no longer afford to take the car to the dealership for service where you bought it, you can just take it to AutoCare. So you can see it's a diversified business. We expect this business to continue to be profitable over time. Nothing is guaranteed in the market. It's nice when these businesses are profitable, they are paying us money. But if ever they run out of problems, then that doesn't mean that we need to continue to stay with those companies. Again, we're going to be looking at some old results. These are interim result for the year that ended in 31st December 2021. The nice thing that we're looking at there, we saw that the revenue was only up by 1%, but remember we had COVID challenges. People were getting retrenched. People were not buying cars because they didn't know, the future was uncertain. People didn't know how long they were going to be in the workplace. So we don't expect much revenue, but still they were able to generate 44 billion or 44.8 billion revenue there. And then the operating or the profit before tax, in this case it was a profit of 1.8 billion, an increase of 46%. Well, I'm not going to go deeper into the financial statement, but I would like to see what was then the profit after tax, because, well, how much tax did they pay? We know it's 28% corporate tax. And then the nice thing that they had an earnings per share increase of 55%. So the earnings per share, it increased to 7 rand 85 cent there. And then the headline earnings also increased by 51%. But I'm more interested in earnings per share, not headline earnings per share. I've been covering in different videos why I'm not interested in headline earnings per share. And then in terms of dividends, because I know you guys you like to buy dividend companies that pay dividends, you can see that they paid an interim dividend of 275 cents per share. Previously they had paid a dividend of 160 per share. So also that is a nice increase. It's above a 50% increase, but that 275 cents per share is before tax. So then after you pay the 20% tax, it drops down a bit. Then we can see the free cash flow that is generated from operations. It's 2.9 billion. So there are a lot of nice positive figures. At the time, the net asset value per share was 77 rand 76 per share. Those people that watch the video where we're talking about, or where we're asking if Purple Group is expensive, we looked at the net asset value of Purple Group. We compared it with the share price. The current share price of Motus Holding, it's above 100 rand. So let's see what's the share price. But that was then, okay, the share price, it's 115 rand per share. So based on this, we can sort of say that Motus is expensive or is overvalued, but we need to ensure that, okay, the name of the company is Motus Holding. We're going to upload this video on YouTube, then you'll be able to see everything that I've been reading here, because I'm sharing the screen. So yeah, you will see it on the YouTube video. Okay, so now when we look at the chart of this company, we can already see that, again, like the other companies that we have covered, it is on an uptrend. We saw that there was a bit of a pullback, coming back to about 85 rand per share before breaking above that level there. So we see this became our resistance or support level. Initially it was a resistance level, and it has been acting as a support level on these levels. And then again, when the share price dropped in the previous weeks, it found support level somewhere there. And then now the share price is back above this key moving average, which is when we started to have interest in this stock. So now what happened recently, we saw that Motus Holding found support somewhere around 100 rand per share. We can also see the volatility is growing, but look at all the number of the green bars, which tells us that investors are buying. Even the red wick, it didn't have an above normal volume there, which shows that the sellers are drying up. So what you expect that above 120 the move is going to continue to move further up. So depending on the kind of risk that you are willing to take, you can buy the current share price at somewhere around 115 rand per share, and then you can have your stop loss just above 100 rand. It could be 101 or 103 rand per share, or you can set a buy stop order somewhere around 121. Remember, we had a video on YouTube. We showed how you can use the different buy orders on EasyEquities. We use that in order to ensure that we don't buy too quick. For example, if we want to have a confirmation, we prefer that we see the price breaking above a key level, then we are able to get into that position. You can also use the EasyEquities buy orders to set a stop loss, but these are not only exclusive to EasyEquities. It doesn't matter which broker you are using, as long as you have access to those different buy orders, then you will be able to buy these companies. So yeah, just from a charting perspective, you can buy at the current share price of 115, or you can buy somewhere around 120, 121. Then you can set the stop loss somewhere around 103 rand per share. I know that some people are not interested in using the stop loss, but we saw that with the American market, it has been weak for a while. A lot of people, they've been losing money. They didn't know how to react to that. Most of the people that were losing money in the US market, even though they still own their shares, but the value of their investment has dropped significantly. That is because people do not believe in using a risk management approach. Well, we're not saying that you should use a risk management approach if it's not something that you're interested in. However, you are going to deal with your emotions if the value of your investment drops. It's your money. There's nothing that we can do. Whenever we place trades or we take positions, we always use a stop loss, because nothing in the market is guaranteed. We can plan that we're going to buy this company, we expect the share price to rise, only to find that the market, it stops going up, the market reverses, and then it triggers our stop loss. Then we exit with a small loss. If we allow that position to continue to drop in value, then it's going to be difficult for us. If there's an opportunity elsewhere, now we can't exit this position because our money is stuck in that losing position. So that is why we always encourage people to consider the use of a stop loss, or at least have a risk management plan. Even if you are not comfortable with a stop loss, just have a plan so that you know whenever that, okay, now this is what I was trying to do, but the market is refusing to move in that direction. Then it's time for you to cut your loss. Don't try to argue with the market. The market is stubborn. It never loses. More often than not, it's the investors that are losing. So just a quick recap. Today we spoke about 3 companies. We're looking at Clicks Group. We are buying Clicks, and then also we touched on Omnia Holdings. It's a chemical and fertilizer company. And then lastly we spoke about Motus Holding, which is a company that sells cars. They import cars like Kia, Hyundai, and they're also involved in other dealership like BMW, Audi, Jeep. It's a whole lot of companies, but they also offer insurance and finance to their customers. And then they have aftermarket part. We spoke about Motus, among other companies that they're involved in. So that's it for today. If you found this content useful, please consider subscribing if you haven't subscribed. And then if there's a company that you would like us to cover, whether it's technical or you want us to go into its financials, just talk to us, chat to us in the comment sections. We read all the comments, we respond to the comments. We are trying to create more and more videos that are responding to the subscribers and viewers needs, because, well, it's you guys who watch our YouTube channel, so there's no point creating content that you guys don't need. So if there's a company, whether it's a South African company, it's a US company, even if it's an Australian company, at this moment we are not trading US Australian companies, but we can still cover. There are people who requested some US companies. That video is coming, so if you haven't subscribed, please consider subscribing. So that subscribe, click the bell notification, so that when we put that video where we are talking about the American companies that people requested and the companies that will be adding into our US portfolio, to make sure that you don't miss that video. Once again, if you found this video useful, please click like button if you haven't done so. Thank you. I will see you on the next video.